So hello there, welcome to my YouTube channel. This is Kelvin Elisha Ziwa and welcome to Elisha FX. So after a while of not posting much content on YouTube, I'm back again with a lesson segment. This time around with a very interesting topic, as you can see, my trading strategy. And so the strategy itself is called the SMC strategy. So that stands for the smart money concept. So what is smart money concept? This is a type of trading strategy used by retail traders whereby they try to align their trading strategy with that of the institutional traders. So I'll explain myself by that. So in trading, we also have scaling. So there is trading on a small scale, and then there is trading on a large scale. So small scale traders are those retail traders that trade their personal accounts, or rather their personal money in the markets. And then we have the institutional traders. Institutional traders are those traders that trade on a large scale, or rather they trade for large companies like hedge funds, big banks, or any other financial institutions that take part in the market. And so the SMC is a type of strategy that helps retail traders align their trading strategies with that of the institutional traders. Now the question would be, why would a retail trader want to align their trading strategy with that of institutional traders? So you have to understand that in the forex market, what moves the market either up or down is the amount of people that are buying or selling that currency pair. So for example, if we have more people buying a certain currency or a certain pair, that would prompt the price to go up. You get, so there is more demand, and so the price will go up. And then once there is less people buying that currency, or rather there are more people selling it, it means that there is less demand of that currency, and the price will start going down. It's as easy as that. So the amount of people that buy a certain currency or that sell a certain currency would prompt the price of that currency to either go up or go down. And so in that case, it's about who has more money in this market. So if the people with more money, in this case, we're talking about the institutional traders who have more money in this forex market. If they decide to buy a certain pair, it means that that would definitely move that price to the top. And so if your trading strategy is aligned with their decision, in that case, it will help you benefit alongside the institutional traders. So there is more volume once you try to align your strategy with the institutional traders. And apart from volume, you have less risk because you definitely trading alongside millions of people, and those people who have the most capital in the market. You get me? So you have less chances of losing trades once your trade is aligned with people that have money, people that are moving the market. In a case of whereby a lot of people with millions of dollars have decided to buy a certain pair, and then in your case, your trading strategy is telling you to sell. Meanwhile, the people with money, people who move the market, have decided to buy that currency. And so if you're not aligned with that, definitely the price will go against your trading strategy. So this is a theory part of, that's why I think in the video you'll see this is part one of my trading strategy. So this is just a theory part where I'm simply explaining my trading strategy, and then I'll have a second part when I'll be showing you guys exactly what you look forward to and how you can identify certain moves to say this is an institutional move in the trading market. So as you can see, uh, like we said, a retail trader is trying to align their trading strategy with the institutional traders. But how exactly do you get to know that now this is how they are thinking about this pair, a certain pair in the market? This is what institutional traders are thinking about, maybe gold, USD. And so this is where it goes back to the technical analysis. So the two types of analysis, of course, that we have been talking about over and over again. In my teachings, I think I've mentioned those. There is what you call the technical analysis and the fundamental analysis. So the technical analysis is a type of analysis that retail traders mostly use. I said mostly because there are retail traders that actually trade the fundamentals as well, but mostly it's the technical. So the technical part is where we use the previous price actions to analyze the next moves in the market. You use the previous price actions, how price has been moving, to predict the next institutional move in the market. This is where now you have the technicals that will show you exactly what the institutional traders are about to do in the market. Things like the order blocks, supply and demand zones, the liquidity sweeps, and then we are talking about the fair value gaps as well. All those things are some of the features that would help you identify the next move of institutional traders, and that will be talked about in details, of course, in the second part of this video. Right now I'm just mentioning the main things that you look for in this trading strategy. And so yes, you are trying to align your trading strategy with the big firms, like with the hedge funds, with the big banks. You are more likely to win. Next video, like I said, we will have the second part where I'll be showing you exactly what I've just mentioned: the order blocks, the supply and demand zones, the liquidity sweeps, the fair value gaps, and yes, so stay tuned for the next video as well. For now, I hope you have learned something about SMC. That's the strategy itself that tries to align your retail trading strategy with the institutional trading strategy in order to catch more volume, in order to risk less and win more, and in order to be right in most cases, because these big firms, these big institutions are the ones that move the market either up or down, because they have more liquidity, they have more capital that they inject in these markets. So all you have to do is just move along with where they're taking the market. As simple as that, using the same strategy that I'm talking about, which is SMC. And so thank you very much. If you're still watching up to this far, make sure you subscribe, you like and share this video. And so stay tuned for the next part where I'll be showing you the practical part of the SMC strategy.